Today on Mining Minutes, joining me will be Rob McEwen, chairman of McEwen Mining. We're going to talk about the El Gallos, possibilities of M&A, and more coming up. And joining me now is Rob McEwen. Rob, thanks for being with us today.
Pleasure.
All right, Rob, lots of news coming out of McEwen Mining early in 2014. Let's start with the El Gallos, leading off with El Gallo 2, key permit in place. What happens next for El Gallo 2 in Mexico?
Well, El Gallo 2, we've got final clearance now to begin construction and operations. So what we have to look at now is the metal price and the ability to finance it.
Good stuff, Rob. Moving on, 33% increase in production in 2013. Now, 2014, what do you see moving production forward? Where are these ounces going to come from?
This year, we're expanding our El Gallo 1, and it will kick in the second half of this year. So we're looking at not much of an increase, about 135,000 ounces of gold equivalent, so converting silver to gold at a 60-to-1 ratio. And then thereafter, in 2015, going to 173, and then up over 200, 2.25. And that would be if we just did gold bar. If we do El Gallo 2, by 2017, we'd be over 300,000 ounces.
Also, real quick, Rob, you mentioned in those end-of-year results that M&A was going to be something that you were going to look for. Which countries would you be looking for to maybe acquire some new projects, exploration projects, whatever it may be?
We're looking, our operations right now are Nevada, Mexico, Argentina. And our interest is through the Americas, so North, South, Central America.
I'm glad you bring up Argentina and Mexico. Them, among other countries, have brought in nationalization, royalty hikes, whatever it may be, changes to mining laws and reforms that were previously held in place. Now, is this a trend that you see continuing, or is it just one of those things that happens every couple of years?
This is a nasty habit of governments, that they make all their policies. It's like they look in the rear view mirror when they're driving, and they see the prices of a couple of years ago and feel that the miners are making a lot of money. They don't, and it takes a year or two to get through their governments. And by that time, we're where we are, where there is no money in the equity markets. Metal prices have fallen by 40%, and they're penalizing the industry. I do think it's a trend, though. Governments look to foreign capital and they abuse it, and I feel that the World Gold Council or other organizations, we should band together and just say, look, before we put another dollar in your country, you have to post a bond. And if you break the contract with us, then we get our money back. No questions asked. Barring that, we should probably form some sort of paramilitary force, slap some of these governments around.
All right, Rob. Let's move on to gold prices. Now, as you mentioned, 2013 was a bad year for metals, not just gold. But 2014 has seen an uptick, an unexpected uptick to many who thought gold would not perform as well as it has been. What do you see happening with gold prices right now?
It's interesting right now. We have the U.S. dollar going up and the gold prices getting stronger against all other currencies. The problems haven't gone away. Everybody felt the central bank, nominally the Fed, was curing all the problems, and they haven't. The debt levels are getting higher, unemployment isn't going down as fast as they said, and capital reinvestment isn't occurring at the speed they were hoping. So I see China's been buying a lot of gold, Russia's been in there, India's just relaxed the rules again. So I think you're going to see a lot more buying going on of gold, and particularly gold shares. They were very, very depressed. And when you look back to August of last year, we had, I think, a preview of what's going to happen in this gold share market. In August, the stocks just exploded for a month, and then gold fell over. But if you look at companies right now, from the July lows of last year to now, there's been some spectacular performance. Up 25, 50, over 100% in many instances. And that's gone on without really anyone noticing it. But if you look at those stocks compared to where their old highs were, and I believe gold is going to test its old high and go through it, I mean, you've got 200, 300, 400% moves that are possible just to get to the old high. And I think your listeners should be thinking very seriously about getting some commitments in this sector before they lose some of the early opportunities.
Let's touch a bit on mining royalties real quickly here, Rob. Would you ever consider maybe selling off a bit of royalties to a streaming company or anything like that?
I'm not a big proponent of selling royalties or metal streaming because I think it takes the profit margin away from the producers. And if you look at the price performance of the royalty and metal streaming companies relative to the producers, they're outperforming by a significant margin. And mining companies are being lazy when they go and sell a royalty company or a metal streaming because they see it as short-term money, undilutive, but they've given away their profit margin. It's a bad thing to do.
Excellent stuff, Rob. Thank you very much for joining me today.
My pleasure. Have a great day, and we're going to see gold prices higher.
And thank you for watching this edition of Mining Minutes. If you have any comments or questions, you can always send them to newsfeedback@kitco.com, or you can find me on Twitter @Alex_Letourneau. Have a good one.